Good morning. This is Amit of UBS's economics team. After 6 days of gains, Asian equity markets fell overnight, with losses of around 6% recorded across the board. Equity markets are set to stay volatile in the coming months as the markets tussle between GDP growth prospects on the one hand and the effects of the various policy actions on the other. On that score, the focus for today is very much on the ECB and the Bank of England policy rate decisions. We are about as certain as one can be that both central banks will cut interest rates. The only question is how big. Now, economists expect to see another 50 basis points of rate cuts by both central banks, following the coordinated 50 basis point rate cut last month. Markets appear to share that view for the ECB, but for the Bank of England, the overnight swaps market is pricing in a somewhat larger 50 to 75 basis points of rate cuts. In our view, the most likely outcome for the ECB is in fact a 50 basis point rate cut, and while we also expect a 50 basis point rate cut in the UK, there's a good chance that the MPC cuts by more, perhaps even 100 basis points. If that happens, it will be the first time the Bank of England has cut rates by that amount in more than 15 years. The last occasion was post the ERM crisis in the early 1990s, and at that time it was clear that the level of policy rates was just too high. The MPC will be asking itself the same question this time. The downturn in the economy has been so sudden, it begs asking how far out of line the current policy rate of 4.5% is, especially as inflation fears have also receded. In our view, the current level is way out of line, and we expect the committee to eventually lower policy rates to 2%. But the issue for today is how quickly the MPC wants to get there. There is also the additional wrinkle of market expectations and policy action. Is the MPC willing to disappoint markets by cutting interest rates by 50 basis points or less? In our view, 50 basis points is a done deal, and there is a fair chance of 100 basis points, but all will be known at midday UK time today. There is much greater certainty with the ECB rate decision. More interesting will be the press conference that will follow. Unlike the Bank of England, which will in all likelihood issue a fairly agnostic statement for the policy rates ahead, the ECB's press conference will be a lot more directional. The tone will, in our view, be dovish on both GDP growth and on inflation prospects, and as such, we see Trichet endorsing more rate cuts in the months ahead. We see ECB rates at 2% by mid-2009. Apart from that, the data calendar is light today. Over in the US, the job claims, Q3 productivity, and labor costs are the only data of any note. Similarly, in Europe, the only data of any importance is German factory orders for September. Orders fell in August, and they are expected to fall again in September. Indeed, if the IFO survey is anything to go by, German manufacturing output is set to shrink at a rapid pace as export orders evaporate. And finally, here in the UK, we get October Halifax house price data, which is expected to show that prices fell by 1.5% on the month and by 13.3% on the year. That is all for today. Have a nice day.